morning, class. Welcome to Homeroom with Unc and Market Monk. Morning, P. How's your week?
It was good. I kind of stuck to the same stocks all week for the most part. MSTR and LLY, a couple others here and there, but I mean that was sort of the morning notes kind of trades, and then just a lot of stuff I've been holding a long time. It's been doing
Yeah,
pretty well.
yeah,
I talked about the energy trade was sort of my big theme for the year, and um, a lot of that in the nuclear stuff, and so those did well. And for those to do well, and for oil to still to be in a pretty good spot, and not some massive gains or something, but just the accumulation of that, and then even solar given its opportunities, just with the disastrous start to the year that had, and the recovery of some of those. I mean, all that's just been really good. So I like to trade the big stories, and that just an example of that. This new move in quantum too has been good. So yeah, we've been on those names, have the entries. It's time to just enjoy that and make some plans. Look for the next big thing. That's where I'm at.
nice. I probably could have planned the week. Actually, let's go that way. I couldn't have probably had a worse plan headed into the week. I was pretty adamant that we were going to get a pullback and I was going to eat it up because I didn't trust it. So I positioned myself to where I was pretty free, or I the stuff I wanted to keep I gave some room to. Well, you get through last week and I didn't get a lot of it, but I had a lot left from stuff like you're saying, stuff we've owned for a while. So the week turned out pretty good, not getting a pullback. Just not really what I planned for. Probably could have day traded a little better with the cues, like you mentioned. But man, but some of the I don't want to call them early TA reads, but just the recent TA reads have been a little bit ahead of the next move. Those have been really good for me, but they're more like thank you trades. Um, and again, following the sectors, I don't know if you noticed, but man, I'm about third week in a row kind of having a little sector in my notes, um, because I'm,
Yeah,
I'm just I'm just seeing that rotation a little better, and when the flow lines up with it, you kind of just go with it. And that was the key. That's where the cues come in last week. It was just, man, these charts are ready, and I think I only had two or three of them, and it was all of them. So if you just kind of hang around us and pick your favorites from the sector and just take that as a cue, you usually can't go wrong. I am, and I hate saying it, P, but I am. Usually, I try to take. If you get 10, you find five that are in a good spot, and you trade three. Well, I'm trading all five of those, and maybe grab a sixth one. In this market lately, um,
yeah.
and you win on the percentages. So definitely interested in the end of this session with Spy, just to see where we're going. I know you probably don't have enough time with we go Friday, big option expiration date into this session, and they don't really have time. But throughout next week, I think that'll be important where they position.
Yes, and I mean, it's interesting that it affects some stocks more than others, and that there isn't. I mean, I haven't found a real um, clear set of criteria for which stocks hit the option expiration and don't give you much versus the ones that have this setup. But I will say that I sort of know going in, if something has November February set up already versus being heavy on the short expiration things. If they're really were you know the decision point was Friday, then it's going to be harder to read those until about I would even say like Wednesday of next week. You'll start to get a sense of that, and what it means for the broader market short term. Um, it's kind of hard to say, but I think in general people make too big a deal out of the day itself. it's
Yes.
quad witching today. Be careful out there. It's really not that usually that day that things change, or um, that you get the next phase of whatever these stocks are going to do. It's after that. It's the week after. So that's kind of the time to be careful. To
Well, I'd also say that, and I mean, correct me if I'm wrong, 'cause I'm definitely from the cheat seats, but it has to be kind of by Friday on the quad witching day, as opposed to let's say Tuesday. It's really got to be in the same ballpark as the strikes you're trying to talk about, or it's really just not gonna.
yeah,
They've already won, right? They've already run the battle
right.
if they're not fighting at that field or level, I guess.
Yeah, and then it just becomes a question of, is this sell to close, or are they rolling, repositioning hedges, all that stuff, and let some of the air out to re-enter. Like, they'll do that too. So it's yeah, you just need to get off the minute chart and look at the big picture and sort of see where they're sitting. And it's also, by the way, I mean, this one in particular is a time where they're opening new leaps, and that kick the can down the road idea has been really good for us. I think, just finding the ones that do that. Real estate definitely was that. Where, um, as we kept pausing, and rate cuts kept getting pushed back and back. I mean, all they did was just reposition those. Open obviously was the most explosive one, but all the big names in real estate that we have, fit that pattern. So I'm always mindful of that particular setup as well.
Yeah, I mean, last week kind of just kind of not taught me, but reminded me. The market's definitely. I mean, fishing's the best analogy, and like you have to be there first of all. And I think a lot of people don't understand that's our advantage. Um, but you don't have to be that tight, like you're saying. You don't stare at like the. I caught a fish under that one log, so I'm fishing this one log the rest of the time. You need to look at the whole river up and down and see what's going on, and that's why I said a couple weeks ago with just stay on the hour chart for two. Just give me 2 weeks. Just 2 weeks on the hour chart. Don't look at another time frame, and it'll change your life. It really, because you're just gonna see things a lot different, a lot clearer, and maybe be better at the actual timing of things. Um, but the overall timing of plays, like I don't think people understand. Like your advantage isn't that you're that zoned in; it's that you're already here. I mean, we get the news 10 minutes. Most people are can't get out of their meeting in an hour or don't talk to their guy until the 15th of next month. You know what I mean? That's actually making a decision for them. So I mean, that's your biggest advantage. Um, you have to use that. You have to know how to use that, in my opinion, too. Um, yeah, you want to elaborate on that a little bit?
Um, yeah, so you're talking about, like, kind of like what we do with.
Well, like, yeah, well, like in your thing, like even thinking about the quad witching stuff on Friday, your timing's just way off. Or like
Oh, right, yeah,
when you're buying X, Y, or Z, your timing is way off. I know, and from
yeah,
listening to you, the open that first 5 minute candle after open usually is bad timing.
yes, absolutely. And so if you're gonna wait, it's like, I mean, it's like any, like, schoolwork, or whatever. I mean, if quad witching, if that monthly expiration, that's like the expiration day, and all, like, fate is eating up all those contracts, and whatever. That I mean, that's really just the last remnant of those positions in most cases. I mean, yes, we live in a market where the zero DTE and weekly option trading is a big deal. But the point of what I do is to kind of cut through the noise of that stuff, and see what's really happening, because a number, like a lot of those weekly options, when did they buy those? What This is the tail end of what position, and whatever they're going to roll it into, for a lot of them, will you'll get tipped off on it weeks, even months ahead of time. And when I bring up in the room, I'm like, we need to start caring about October. We need to start caring about November. January is the hardest one because it's the it's kind of the leap date, right? And so much centers around that. I can more easily see them maneuvering in the months leading up to and after that, and those are going to be your best boxing glove emojis um, that I put up there. So to me, a big part of what we do in the preparation and all of that is to cut through the noise, and it's the biggest problem I see with anyone who wants to talk about options on Twitter. They'll just see big volume spike in a contract and read too much into that or read the wrong things into that. So
From
yeah, we've been at this a while and can avoid a lot of that. I think.
as a non-options trader, just like kind of putting some of my checks onto the option. Like if I was an options trader, you wouldn't want to buy that aggressive whale 50K alert. You want to buy those like repeated on schedule buys. You want to buy with them when it's kind of when they're trying to be quiet. And for me, it's always just been to kind of go back to what I know and get out of that. Um, it's always been more of about taking that signal from you and then looking for price stability and then looking for too much volume in that price stability, which forces a move out of the zone. I mean, that's just always kind of what it's been. So um,
Yeah,
it's not what how you want to say it. It is built off day trading, but there's enough meat on the bone that it can be long term in swing trades. And I think that's kind of what makes us different is we just don't give up after the call or the alert, right? It is
right.
the full play because I mean I trade shares, so that 30-cent contract move and Twitter posts just don't really do it for me. Um, and we see that over and over again. But I think the shiny things that look important, I guess, on both of our sides, aren't really the
Yeah.
things that aren't really the buy signals or the signals to enter a trade.
Yeah. No, they're not. And I mean, it's staying ahead of sectors. Is important too. I mean, I don't know that a lot of people were talking. Soda. They're all talking quantum and wanting to buy IonQ at $130. Um, and it just doesn't have appeal to me, given our entry on some of these things. Even looking at it from trading the options on it. That I talked a long time about how on these the big story moves that I'm not really looking for nickels and dimes. That it's a bigger thing. I want to stay in it. I want to build a position. And yes, I mean you do peel some off on the way up, and I mean you can't like Rigetti going 22 to 17 to 12 to 30. I mean like that you can't really hold through all of that, and you do
I
the
had
inner thing.
I had trouble
But
buying that at 5.
yeah, right,
I'm
right,
just saying.
yeah. Um, but yeah, but at the same time, I mean, on the option side, I mean, these are really high IV scalp trades, and if I'm going to scalp something, I just would rather it be John Deere moving 1%, and a quick hitter that gives you a little time to breathe instead of I mean, the thing about the high IV things and why I really encourage people to actually look at how contracts move. You get one flat day on
Yeah.
hot names, and it just kills the premiums on those things. And for moving, not at all, or just dropping 0.7% on the day, they're poof, $200 gone. And it's yeah, it's just too crazy. I mean, so if you're gonna get in high IV things, uh, you have to be very careful about that. And on the flip side, it's why IV crush is a term people throw around. I don't think they really know what that means either, though, because sometimes they'll bring up IV Crush on a stock that moved 30% on earnings. That's out the window when it goes that much. But anyway, I mean, so you want, if you'll see things in the casino sometimes, and then that one doesn't work, but then I'm on it the next day. And the reason I'm on it the next day is because the IV's in the ditch on that, especially early in the day, and those are kind of the quick hitters that you want. I mean, you buy when IV is low, you sell as it goes up. Same principle, you sell into the fat green candle or the fat red candle if it's puts. You don't let it spike and then see. I mean, I'll talk minute chart for just a second, but like if your minute chart RSI is like 90, what do you think is gonna happen? I mean, like, do you really think it's gonna stay up there? No, it's gonna come back, and it might make that secondary move to retrace that high. But more often than not, it's gonna pull back a little bit, and it might park there for 2 hours. You can't sit in options for those 2 hours. You just can't do it. And I don't know. People learn. I would say people learn the hard way, but then they just keep doing it. So there's a better way to live. And if you just use the work of what we do, you don't have to worry so much about that stuff.
Yeah, just wrote a couple things down while you were talking there. That the, I, we never say what will get you ruined, but let me tell you one thing I guarantee will get you ruined in our room. You cannot do this. You cannot take my signals or my posts and then use your style or how you trade.
Yeah.
Because I'm looking for
Right. Right.
consolidation over 2 weeks, and you're looking for a good timing on your option entry. And what you just said kind of explains that. Like, you have to understand the reasoning or the timing of that. But yeah, I think you just get ruined if anytime I post something if you bought an option, because you're supposed to
Oh
be
yeah. I
buying
mean, yeah.
buying shares then.
I'm I'm trying to avoid the consolidation. I
Yes.
I, I want to see it, and it's like, and that's where to it, not through it came from, because that's what those spots are. I mean, that's consolidation. That is MSTR parking at 334 for 4 days before it pops to 350, and so I like that setup, and find a way to you hedge it and like do all this, but yeah, I mean it's why you want to trade like for a test of a spot you think it's going to, rather than just buying into that consolidation and averaging down your options over 2 weeks. That doesn't no that does not work.
Yeah. No. And I mean, I need to find a better way to note them, but most of my plays are for that person that only has an hour a day or a small window, so they do have a little bit of time. Um,
Yeah.
that best entry is going to be a red candle, and as long as we have a support floor, that's going to continue to be my style. And then you touched a little bit about the scaling out. This is a quick science project, P. You got a thousand shares. Oh, let's just do 100. We'll make it super simple. And you scale out half. How many you got left?
Yeah.
You got 50, right? After the first half,
Right.
right? And then the second, you scale it half again. How many got left? 20,
25.
25. Scale it again. How many got left? 12 and a half, right? Scale it again. What do you got
Yeah.
left? 6 or 7, right? So you're on your fifth trade, and you still have about, let's just say, close to 10% left. Um, you you don't have to scale out 50. You can scale out 20, 25%. But taking those little hits, it's just a green trade, green trade. You're breaking your trade up into parcels or blocks, right? And for me,
Yeah.
that's just how you stay ahead. You win the game, and it does get harder to re-enter on those, but you just stop scaling out. I mean, I think what you people don't, if you do 50, if you're up 25% or 20, let's do 25. It's easiest. And you scale out 50, well, the shares you have left are up 50%. So I mean, there's so much room to go,
Yeah.
and I think people don't take advantage. It's an all or nothing thing that kind of gets people killed. Um, we have a very good example of somebody that can do it with just like one stock. I mean, Pele's been training Wolf for the better part of a year and a half now. Um,
Yeah.
and it's just one stock, but that's he's not winning because of the it's a good company or it's even a good thesis. So it's I mean it's the shittiest the shitty thesis, and that probably helps the guy from holding and hoping. Um, but it's the range and being able to trade that range, and you just got to master that for me. Because we get a lot of those questions like, what do I do with this? What do I do with this? Well, you probably should have already done something with that, and then just kind of let it ride or let your runner run a little bit.
Right. Yeah. No, I mean that's the right, perfect, perfect explanation. And I, the questions that we get sometimes about re-entering something. I think one of the things I want to do, because I mean yes it was great to get um, Hood and the quantum stuff and Carvana and like the entries on Facebooks and the entries on some of these things.
Sure.
But for the ones that where that's just never coming back, or not, it would take something catastrophic for some of those entries to come back. That are those stocks just off limits, like for good now from here,
Well,
or which ones actually can set up something new and you go up. And I think about this with something like snow, where it's possible the Mag
yes.
7 AI thing,
Yeah. Yeah.
for decades or something, that snow is gonna make some new range and it's 3 to 600, 3 to 500 or something like that, instead of back down at our old level. So I think about what would the criteria be for me to be willing to look at that. And I guess the first one that comes to mind is it takes time. It takes time to
Yes.
build, and then the other one is some of the fundamentals.
Yes.
Palantir, for example, is just way out of whack for valuation and stuff
But
like that.
your historical examples, I mean, even for us, we can use just Tesla and Nvidia. I mean,
Yeah,
Nvidia, I was selling out of Nvidia at like 600, 700 on that ER kind of pull back and go, and then it split, and we didn't find value in it until it was at $90, which adjusted was like 750, $800 right in there.
yeah,
So for me, it is you nailed it. I was hoping you didn't say it, but you snuck it in there. The fund and Tesla's the same way. The fundamentals just reset back up on those. And, they get way
right.
overextended. Things change. It's not really about price. It's about that fundamental setup. And we just had it. We just hit Apple. And I mean April. I mean it's kind of cheating in April, but I bought Apple in April
Yeah,
because it was just oversold. So they do come back. For me, you kind of cheated with snow because I'm with you on this how you ran snow. But for like a Tesla, no, that's probably a bad example. But for like a Nvidia or an Apple or a Microsoft, or a Facebook even, like to get that 100% move now, it's just it would take a lot. And there's other things out there that we could probably get a 200% move on, and all they have to do is knock the dust off the goddamn books. You know what I mean? So
right.
Open was a great example of that. The whole real estate sector was a great example. I'm trying to think of good companies and not crap companies in this comparison also. SoFi, that was a great one down there under 13 was my cutoff point, but you're 100% already because it finally just got up and got out of the ditch. Hims at 20. There's just, yeah. There's just better stuff that is undervalued. Where our Mag 7, it just hasn't really stopped. So there'll always be another entry, Pete. It's just the story and the thesis and the fundamentals that they got to change.
Um, yeah, and I mean, if I'm not saying it's like right now, but you could 100% Dow.
Oh, sure.
I mean, and just about the how much time you want to put into it. AA. So it's not just high beta tech stocks where this can happen, and I think that's a big part of what we do as well, and that's why I'm so obsessive about sectors. I mean, there's some in oil that the smaller the oil stock, that it's gonna be hard to 100% oxy, but you could 50% it
Yeah.
from here, and did
Oh,
the 100% thing before, but it's it's just it's yeah, different sectors kind of move differently, of course, but
that was one of my notes that I lost, but I just remembered it in my head because I don't know where I put them damn things. Probably in my phone. Um, but man, your risk is usually gonna it just people don't get it, and I'm doing the 10%. You're on your own in Ankstrom. I don't know if you've caught that, but I'm literally just saying enter here. When you're up 10%, you're on your own just to see how people handle it. But your risk will match your reward, and the reason I bring up those is because I'm trying to take the risk out of it, so the reward's not going to be 100%.
right.
It could be on a few. I mean, QS was in there a few weeks ago. That definitely um, moved a little bit, but you're gonna have a bigger risk if you're gonna have a bigger reward, and I think that gets overlooked all the time,
Yeah,
especially on the share side, because you are going to have some of that movement. You're like, oh fuck, I'm down 10-15%. Well, hopefully you didn't plant a flag, and you plan to buy more in this scale, and hopefully you have a spot where the setup has fell apart. And a lot of people that I know, because I just ask, hey, well, where are you at? And you get their entry, and it's like, man, there's no way you got. If I said six and you got 658, you had to have planted your flag. There's just no way you could have DCA'd that bad.
right. Yeah, no,
It's
absolutely.
impossible.
And I mean, just well, the example of DCA for me of late was Intel,
Yeah.
because I didn't have a short term
No, that was
read on Intel. Like it just I'm just like there's leaps out there at 35, um, and they're out there and they've stayed there and they're just not moving. So they're parked. They're parked and waiting. So I'm just gonna treat that one like a build. Um, there's nothing real sexy or exciting about Intel, but they're important, and it's why I got into them. And then anytime in, I mean, this is why like there's a lot of complexity in semiconductors to me that um, the the factories and wafers and cleaners and the machinery that does all that stuff. That finding when I think those are going to get a little boost is important, and when you get a big partnership that involves the fabless people, the AVGOs and Nvidias, you know, getting on to the well, who's going to actually physically make this stuff, then you'll see those start to move too. And um, AMAT, pops 7%. They're not even you won't see them in that article, but knowing that Nvidia and Intel getting together, you got to turn some machines on when that happens. Finding that and already sort of being positioned within those is much easier than Intel pops 27% at 30 minutes after open, it's up 22%. I can't even tell you that. I mean, thousands of retail people got destroyed. So what a great day! What an awesome day for Intel people. But you hop in late, you try to play options, you're gonna get wrecked. So that's I don't think many people in our room do that. They don't stay long, just because I guess our style isn't that, and so they don't hang around. Even though I will say that, not to just sort of brag on myself, but like I write some pretty good quick hitters too. Like you can, if that's what you want to do, um, there's plenty of those. But I think the always keeping an eye on the full scope of the work is going to really be what makes this more rewarding and reduces stress, reduces the amount of mental capital you have to put into it. And so I over time have tried to to focus more on that and to keep the quick hitter stuff compartmentalized and small, and that's helped me a lot.
Yeah, for me, that's always went back to management, P. I'm not trying to say, hey, do this, and then seven people are saying, I did this, help me out. Um, I'd rather just give you the you know the blueprint on how to make the cake and let you get to work. And we do a pretty good job at that in general.
So, before I get to the boring stuff, a question for you, because
Yeah, let's
you're
do
not
it.
you're not into options, but the options equivalent, like, so you get these micro floats in this
7 million.
environment that
7 million.
do this bullshit that that it's up 100% pre-market,
Yeah.
and
I,
today this it's probably gonna go 500% today or 1,000%. Like it's one of those that could do that. That I know that you see though. I mean, they don't show up in your filters, but when you see one like that, that you're like, yeah, this is gonna have a lot of movement today. So why do you stay away from those?
so
You,
my
like you're like,
my felt
I could scalp 50% on this.
yeah, good.
I see the chart. I see level two. I could do that, but I don't do that. So why don't you do that?
Well, my filters are 7 million. I'll throw that out there for everybody, and I do have one that's kind of open, so I do see the 80% pre-market bio move. That's the number one reason I'm not touching it is if it's a bio. A lot of those, if you look at them, they are bios. If it's under 7 million in a bio, that's like a double no. Under 7 million in general, it's real simple. I'm trying to trade 1,000 shares. Go into one of those things and try to get filled. Just try to get filled, and
Okay.
if you do get filled, you're probably paying 3 to 4% above where it's trading at currently, and then you're gonna want to get your move out of that. And I've seen enough of those not hold up, um, to just not even mess with them. And then when I did trade those, I would never trade them. Maybe if you got filled in the pre-market, I would sell into the open. But that's where the secondary moves are safer came in because I'd look for it to hold pre-market low or um, the yesterday low a day and or pre-market high yesterday high a day. I would just look for the secondary consolidation if I was going to trade that because then again you can get filled in that consolidation on the price level. But the fills, go ahead, go find something that's ran like that in the morning, and you'll watch level two, and it'll look like there's a ton of volume, but you're not getting fulfilled. Whereas anything that we trade that we know, I like let's just use like let's say piton runs. I know exactly how my fills are gonna go and where I need to how my, if it's trading at 840, I know I can put in 834 and probably get a piece of it down there. That's just piton, and every stock has that kind of characteristics, like their natural little movement. And pennies is how I make money. I mean, every little bit counts when you're trading shares on my side, especially when you're trading 1,000, 2,500 shares or whatnot. But 5 grand trade, however you want to put it.
Yeah, no, that's well said. And I mean, the same, the equivalent to options would be the when you get the big bid ask
Spreads.
spread.
Yeah.
Yeah, and we had this one guy who he was way too aggressive. He was in the room for a while, but um, he one time bought, I think it was Tho options, and thought he made a lot of money on it because the bid ask spread was like 20 on the bid and 400 or something on the
Jesus.
ask, and so it was like the price it shows you is the mid price, and it's just like no, that no one's gonna buy that for that price. So you lost on that. Sorry.
Yeah, and that's
Um,
what you see on those float. Like I'll go watch level two, and that's the first thing I notice. And that's I would just tell anyone if you don't want to get into level two and you're trying to be quick and you just want to check if the bid spread on a stock, especially some stock that's like under $4 or $5, is more than
yeah.
5 cents. It's like 5, 7, 8, 10, 12, 25 cents. Do not trade that. Don't. Just leave it alone. Just walk. That's your signal to walk away. You're gonna get chopped around. You don't know how to trade that. I don't know how to trade that, so you don't know how to trade that.
So I'll say this real quick, and then I'll get to the boring stuff. But the last phase for me before I got into reading option flow was these like after hours. runners that the next morning would pop up, and so I would like try to I'd look after hours, see what's moving, and spread some money around in those. And then the next morning, if one of the three
Mm-hmm.
made a move, I make a couple $100.
Yeah.
But I think not realizing at the time that wasn't normal. Once I figured out, like, once that slowed down, I was like, oh, okay, this isn't how the market works usually. So that you would have, because I mean, for a while there, it was like just you know three, four, or five a day of these big after hours runners, and then they'd pop up the next morning. Like, but
You
that
could trade the same one too, probably for 4 or 5 days.
yes, right, yeah, and the it was a little later, but the DLPNs of the world were like that for a
Yeah,
while.
100%.
ECAT and all those,
Yeah.
and then China Friday and all that stuff. But yeah, it's not really reliable as a
No,
way to.
what we're last point, and I'll let you get to the boring stuff. What we're talking about are the equivalent, and this is more for you. Sorry, you all have to listen to this.
Yeah.
But what we're talking about is those kind of plays are my version of the 3 cent option contract that we're claiming went 300%. It's
Yes.
it's it's my version of that. I mean, yeah, you could get 10 or 15 shares. You're not getting full size. You're not getting the full move, and it's not worth your time. It really is not.
Yeah. No. And it's I mean, if you happen to have 1,000 shares in some of those already, like, your average probably isn't anywhere close to what the current price is.
Yeah, no, you're not, and you're. That's. I mean, kind of
You're
circle it back
banked
to
already.
what we said. If you can't buy at several price points, like, yeah, you're hosed.
Yeah.
You better have that skill going into that.
Yeah. Yeah. Absolutely. So
I lost.
that was a question I'd been wanting to ask. So
Yeah, no,
that was
it's
a
a
useful
good
question.
one. Your screen went down, P, right before we went
Oh,
to the boards.
yeah. I went into sleep mode for a moment. Hang on. Let me do that. Share. Should be back.
Yep, there we go. All right.
All right. Okay. So I'm gonna start with silver and gold. Get them out of the way. I mean, what can I say? I don't know. I mean, it's I think if I went back, I do want to hear what I said about gold
Oh,
back then. I think it
hold
was 34.
hold on. I'll pull it up. Keep talking. I'll get it. I'll get it queued.
Okay. So yeah, I think it was 34, and I didn't make some secondary call to 4,000 or something, but I didn't think it was just that's the top and it's gonna collapse. But I mean, yeah, 4,000 seeming like it's probably gonna happen at this point. But I still just think it's hard to enter these, and you just have to just look for miners with bad news, and kind of go from there. And it's just the scraps of what's left. There are some distressed ones that you could look at, but yeah, I mean, the Barrick Gold of the world, the POS, like, they're just so far
I
gone.
find
So
I got the 100% on Barrett this week. I was happy about that.
yeah, yeah.
I made a video. Y'all didn't watch it. Hold up. I'm gonna run it a little bit.
Um, Gold and silver,
Oh, we're not gonna be able to hear
kind
it.
of more of the same. I still like silver a little more, dipping under 30. I think, to me, if I map this onto the stocks, 28 is sort of the absolute floor I would expect on silver. I
We're
don't
gonna move on.
think we even get there,
Give it like
but
15 seconds.
anytime it's under 30, I think you want to look at some silver charts, maybe start to move in on those. And let's see, natural.
Yeah, there's a link to that somewhere. I wish we got the sound. It's in the room, P, though. But yeah, you called the. It was both the charts, to be honest with you. It was silver and gold at that point in time. Um, December 24th was the date. So the link's in the room though.
yeah. So the other sectors here, the other commodities, copper, still just sort of in that consolidation recovery area. Nothing much has changed here. Um, you know, 4.5, 425 probably be about it for any big drop from here. But yeah, just looking for mid candle, $5 on that.
Got the
Swing look in the
got the good DCA play there for me. It
yeah
moved in that consolidation, so I'm up pretty good on that one right now. I wish I had more copper charts.
yeah no I'm with you on that.
I
A lot of them are
you want a good copper, not to go way off topic, but I was searching the first UUU posts, and it was like
yeah
20, it was like 22 or 23 or whatever. But I thought UUU was a copper stock.
oh yeah yeah they yeah I got honestly the uranium was just curiosity as I got into commodities and I noticed that the uranium futures were odd and then found out why. But I was just like, what even are uranium? I mean, what tickers are uranium? And I just called up a list, and then CCJ
Yeah.
obviously kind of dominated things. But yeah, I found the U's and UEC and DNN like those were the ones,
And then you, Roy. You
and
did
then
find
Uroy
it. Yeah,
came later.
later,
Yeah,
yeah.
and then you started to get. Now we're into this phase of all these, the ones who don't pull it out of the ground, but the modular reactors and all those pieces.
T-shirt companies.
So it's turned into a great sector with so many different ways to trade it. So,
Yeah, the secondary list names, SMRs, NNEs, Oklos, those are the ones that really got me excited, just because of the range and the news around them. Where the other ones, like the pulling out of the ground stuff, is just a grind. You treat it like a bill
yeah.
grind, and where those other ones, a news play can really move them. So, good stuff there.
Well, I look back at Oklo and I started buying it well above the level you talked about, and that was painful too. I just bought it all the way down, just because I just believed in the big story on it. So I was yeah. I mean, I don't even use the word conviction very much because I don't like how people use it. But the conviction usually just means people are losing. They're losing and they're brave about it. But no, that was a good one and sort of taught me a lot about scaling in. Um, and I've used that on Elf and several others since then. The China still really strong to me, and I don't. Not that you really trade this chart, um, but when the chart's doing this, there's opportunity, and so I just keep looking for individual names on China.
Why do you like that over K-Web? Is there a reason?
I K-Web's a little bit more uh, tech focused,
Okay. Okay.
so I just get kind of a broader look through Hang Seng to me.
Okay. I like it.
And just and it's because I mean, this is the futures look, right? So the way that timing works, when their market opens, it's easier for me to go see what's going on here versus the purely American ETFs, I guess.
Makes sense.
And yeah, so oil, natural gas, just accumulation area. Nothing really going on here. News can move these, but you definitely don't, do not buy oil into pre-market green. That is a horrible idea because it often will sell right back off and find some equilibrium, catch at a higher low maybe, but I wouldn't. If Oxy spikes 2.5% pre-market, don't rush into it. I think you're just cut out the noise, focus on the bigger picture for oil.
Yeah, time and timing. Time and timing. Big names are good right now if you need some help. You're selling the Dinos and the BPs of the world, and you're holding the Oxys because It's above that 43, and you're really getting into the zoms and the cops and stuff right now because they're pulled back into the low 90s or whatnot. Just general.
Yep. And then lithium. Finally sort of out of the ditch a bit, and long way to go. I mean, I don't see $50 lithium anytime soon, but 12 to 17.
That'd be cool.
That.
I don't post. A good time to mention, man. I do not post for fun. You should have a good spot in LAC, SGML. You should be knowing what to do. We've been early there. I'm on my third trade there already, people. Don't miss the show here. Oh wait, we're in the free session. Y'all didn't hear that. My bad.
And then the 10-year.
Right where we want it. Right. Let me start this one, P. Right where we wanted, but we didn't get there how we wanted to get there. The divergence between the actual moves of the stocks, that told me a lot because they didn't drop when this was dropping. Seems very strong. Your mortgage rates are going to be more determined off this than that rate cut. Pay attention.
Yep, no, absolutely. And by the way, you don't see a list of 10 of these, the 30-year, and I just focus on just this one. And it's enough. I mean, that's been my experience.
Is that like the 10-minute chart and the 1 year is the minute chart?
Yeah, right. Yeah. So if you want to get into bonds and be our bonds expert in the channel, like we will read your application. But for me, for what we do, staying locked into this one has been good. And the dollar as well. There isn't a lot you really need to do off this, and for fun, I've asked for some TA on it here and there, but it's not surprising that it would get a little bit of a rally here, and could pop into the 98, 99 area. You get that pop and fade look when that happens, so just be mindful of that.
Damn, I don't know that one, P. Not for me.
Yeah, I know. Yeah, it's just another one where when the moves get a little violent, you just got to be careful.
Like RSI, MACD type stuff. I gotcha.
Yeah. All right, so then I can go to SPY if we want.
All right. No, we skipped something. Hold on.
Oh, wait. Oh, man, wow. I can't believe I forgot it. All right. All right, so Bitcoin, we're got out of the danger zone for now. Anything like, if 108, the move from 108 to 102 could happen very fast. I think a move from 115 down there is going to run into a little bit of, I don't even know if I want to use the term support, but bumpier road down to your number. My number is still going to be tricky to get to without any news, so we'll just see what happens. But what's your take on Bitcoin right now?
We hit that 117,900, or excuse me, yeah, 117,900. So basically 118, which I said 119. So kind of on schedule there. Maybe a little bit of consolidation in that pullback. I like your 108 spot because of the last kind of local level. But if we just go back to where I said the move was, that flush should not be more than like a day. I mean, you can see it right there. You can see it on your J in July. Yeah. That should be the flush. Right. So if it does happen, you're looking for it not to last. Anything under that level for a while is going to be trouble, P. I love your 108 number. Yeah, just think that's where we are. Living the dream with it. You get a lot of news about Asian outflows. Let's just put it that way. That's what I don't read a lot, but I'm in the news a lot, and that's what I hear in the news about Asian outflows. So short-term fuddish on the chart. More it holds up during that in that environment, the better for me.
Yeah, and the the divergence got resolved a little bit where I think Bitcoin was pretty much flat on the day, and both MSTR and Coin popped up like 8%, and it's like if then Bitcoin's gonna dip. Well, okay, so now MSTR and Coin can just dip to pivots to previous pivots instead of a more aggressive breakdown. Like MSTR going under 300 isn't especially likely, but to go little pop to 350 back to 320 317, that's just sort of normal everyday stuff for that one. So that makes some sense too. If we're going to get FUD, that they would drop from more of an elevated spot makes sense in the option world. So I'm with you there.
Two quick things, or leave that up for me for a second.
Okay, yeah.
The move we talked about last week, which is, let's say, the right around the J in June to a little before that August buy signal. That's 57 candles.
Yeah,
that's a lot of candles. So looking for it in 3 or 4 candles, you need to understand where we are in the chart and just go to the last one. That took 3 months.
right.
That is where I think we are. Not to toot my own horn, but I want to make a big point about this. You make a joke about it. I've been like, Bitcoin sucks. Leave me the fuck alone.
Yeah.
Bitcoin sucks. If you look at the time I've been saying that in the charts I dropped, I dropped Hive, BTIF, and the Bitdeer one. I'm going to say that's both of us. But the other two were 100% just me. We can find junk in a shitty sector. But that's a good signal. If I say this is trash, but these charts are good, there's got to be a really fucking good reason for those charts to be good. And that's the end of my rant. Sorry, P.
Yeah, and one of the reasons they're good is because they're talking about what they're going to do other than Bitcoin. So the news that's moved some of those, or the sentiment that moves them, is that they're getting into the AI data center thing, and so that's been part of what's been good about them, and then just also you get the ones that don't have the layers of bag holders above you.
That was BTIF.
To get that clean. Yeah. So that's been good.
I mean, look at those fucking candles. Timing is everything.
Yeah.
This is what I seen. This is what I seen. P said crypto, find the good ones. It's not that hard to put yourself. And did I know it was going to have 2 boner candles? No. Did I think it could be faster the zone? Yes. But I did know my downside was very limited, so it was managing the risk in that place. Same with Hive. Hive's the same way. But I digress.
Yeah, absolutely. All right, so then into SPY for a minute. The
tight.
Yeah, not much. I mean, it's still there's just not the compliments, right? And now that you get September off the books, maybe we'll get a little more clarity. But this March 585 just does not have the companion that I would look for it to get some big drop. Like the 640, 630, 620. Where is it? It's just not here. So I mean, it's in that regard more of the same for us, I think.
Yeah, I mean, I'm kind of hoping for a pullback at this point in time. I mean, just in general, just how the chart looks, we're 5 candles in and haven't had a pullback. 645 would be my number, and again, I think people think the sky is falling if we get that. Needed. I mean, we're at that point now, though, P. It's needed.
Yeah. Good. Someone needed mute.
Yeah, I got him. So this week, just kind of the similar read that we've had the last few weeks. I mean, you're not stopping the oxen. There's no appetite for puts.
Yeah.
Is that where we're at?
Yes, right. And there's no appetite to even rehedge just yet. I'll look at what the JPM collar. I know their short calls are underwater on that, so wherever they set back up will be
What
relevant too.
number mentally changes SPY direction? What number would you be like, oh shit, I better go look at things?
Well, it's it would be like a something in the summer in like this like
No,
six
I
ten
mean
and six.
I mean in the actual chart. Like a pullback.
Oh,
What pullback
okay.
number would you be like, I need to go get in the flow now? Class
Yeah.
dismissed.
Well, let me see here.
Because for me, it's still kind of that 6:30. I'll throw mine out there, Pete. It's still 6:30 center
Yeah, I
market.
was gonna say six. I'd say 620.
Okay.
But yeah, I'm kind of with you.
And then so 6:40, 6:45 needed pullback. Or do you? How do you see that?
Yeah, it's a needed pullback that's going to feel disastrous to people,
Okay.
and
Not
that's sort of the fake out. That's the manipulating the gears to reposition and go higher kind of thing.
I mean, we are 660. I don't know what to do
Yep.
with my hands up here.
Yeah, right, yeah.
So more the same then. Let's leave on that.
Yeah.
Let's leave on that. Last week, and I didn't catch it till like Wednesday, Thursday even. But we have never had a week. It's just a great indicator, and I don't use it nearly enough. But when we have under 10, it's usually pretty focused, right? Like there'll be some movement in the market, but there's going to be some pullback in the market in other places. But when we have like 15 or 11 or 12, it's just going to be a good week. There's no way around it. And last week was that. We had so many, and we haven't had that in a while. And then, to kind of replay the week, it was just very bullish throughout the week. So um, I wrote that note a little bigger and put a star next to it.
Yeah, absolutely.
All right, you got anything else? Ready to get to work?
Yeah, I'm ready. I just need just a minute.
Perfect. Like and subscribe, link somewhere, people.